This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
By far the most tested assessable taxable benefit that we'll see within your examination is here dealing with cars, as we've mentioned this in the lectures hitherto. Now we get into and deal with both the provision of a car by the employer and also potentially the provision of fuel to obviously service that particular car. Now then, a couple of situations where there's actually no taxable benefit at all. Clearly the most, or rather least likely, that you're going to see in terms of an exam question, because there's nothing to calculate. But it's the sort of thing that could come up in a Section C written question, where you've got to ensure that if something is exempt, you state that. You don't just ignore it within your answer. If something is exempt that's been put within the question, you state that it is exempt, with, of course, if there is a reason why that is. So let's just get those two situations out of the way. First one, as you see in the first line here, if there is no private use of the car, there is no taxable benefit. Now that is incredibly unlikely. Private use would include simply going from home to work every day. That is private use. That's not business use. Business use is where you go from one place of business to another. But simply commuting from home to work, that is private. So it's incredibly unlikely that absolutely no miles whatsoever, or kilometres, however you prefer to record it here, it is incredibly unlikely that you're going to see a situation where there is absolutely no private use. And down towards the bottom of this note on cars, the last situation, something called pool cars. Again, quite rare, rather more likely to be seen within a Section C than a Section A objective testing question. The use of a pool car, we'll talk about what it is in a moment, does not result in a company car benefit. So what is one? A pool car is one provided for the use of any employee purely for use for business purposes, and is kept at the business place of work. So it's not garaged anywhere near any individual employee's home. It's kept at work, and as somebody needs the use of that particular vehicle for company work, throw them the keys, off they go, they bring it back. That therefore is purely business use. There is therefore no assessable benefit as regards the use of a pool car. But by far the most likely situation for us to see is, of course, it will be neither of those two situations, and there will be an assessable car benefit for you to compute and come up with an answer to. So what information are we interested in? Here in the second point, the benefit is a percentage of the car's list price. So there is the first information that you need to pick up on within a question. What is the list price of the car? Now, they might tell you what was the actual cost of the car. In fact, they probably will tell you the cost of the car. And that is likely to be somewhat lower than the actual list price. We use the list price. Leave alone, ignore that cost figure. You want the list price of that car. Whether this is a new car, you are the first user, or it's a second-hand car, what you need to know is the list price of the car. So there's the first thing. Also, in relation to that list price, it will include the list price of any accessories fitted to the car. So if you got your basic car and then you had, I don't know, air conditioning fitted, although I think probably they mostly have those these days, but any optional extras that go in, that too is added in. That's all a part of the overall list price. What may happen in a situation is that maybe the employer, for their employees entitled to have a company car, have a limit of, say, £20,000. You can go up to a cost of £20,000. But maybe the car that the particular individual employee that you're dealing with really wants is one that costs £22,000. So what happens, therefore, is that the employee says to the employer, look, I want this one that's going to cost 22. I know your limit is £20,000, so I'll put the extra £2,000. So I'll make what we call a capital contribution towards the cost of the car. So the list price Remember, we base the assessable benefit not on the cost but on the list price. But that is reduced by any capital contribution from the employee up to a maximum of £5,000 deduction. Now, not that it's likely that the individual employee would put in more than £5,000, but if, for example, they put in a contribution of £6,000, the deduction would only be £5,000. And that, though I said the individual wanted a car that cost £22,000 and the limit for the company was £20,000, that £2,000 capital contribution would then be deducted from the list price. So if, for example, the list price was £25,000, the employee has made a capital contribution of £2,000, you take the 2 away from the 25, not from the cost, from the list price. So there's the first thing that we're interested in to pick from the question as you read through. You want the list price. Adding into that list price the list price of any accessories that were fitted to the car when new there, and then looking out for, as we just referred to, if the individual employee is making a capital contribution towards the cost of that car, in which case that capital contribution to a maximum £5,000, that will be deducted from, again, the list price of the car. Now that is the first of 2 vital pieces of information that will form the basis of determining the assessable benefit. The next you can see here is that we need a percentage to apply to that list price to come up with a figure of assessable benefit. And that percentage is based on CO2 emissions. Yeah, for many, many years now, what has happened is that the less eco-friendly the car is in terms of the CO2 emissions that it emits, then the less eco-friendly, the bigger will be the assessable benefit. And what you see here is a list of various levels of CO2 emissions, and then a percentage. A percentage that, to begin with, we'll talk more of this in a moment, based on a petrol car rather than a diesel car. Now, as you can see, there's quite a list there. Well, immediately, don't worry. This information, what you see here, these percentages, that information is all made available to you in the exam on your rates and allowances page. So we don't have to remember any of this. You have to remember, of course, how to apply it, but the actual numbers, as you see here, are given to you. So what we'll see is a steady rise in this percentage as the CO2 emissions increase. What we have to begin with is if the CO2 emissions do not exceed, and what that abbreviation there stands for is grams per kilometre. So 50 grams per kilometre or less, we have 16% as the assessable percentage. So if we had a list price of £10,000 and we had 45 grams per kilometre, i.e. not exceeding 50 grams, then we take the 16% of our list price of £10,000, and that would give us £1,600 as the annual benefit. Notice again, as with most of these benefits, we're computing as regards the use of an asset an annual benefit. If that benefit has not been provided to the employee for the entirety of the tax year, then we'll time a portion. If you've only had the company car for half of the tax year, then you're only going to get half 6 months worth, 6/12 of the assessable benefit. The figures that we compute here are annual figures. Again, you need to read the question carefully about when that vehicle was made available for the use of the employee and or when it was removed from the use of the employee there. Okay, so we've got our starting point, anything up to 50 grams per kilometre. And what then happens? As those grams per kilometre go up, so the next category, 51 to 75, then up goes the percentage to 19%. We then look at 76 to 94 grams per kilometre. We go up another 3 percentage points to 22%. And then we get what we call our base level of emissions, and that is 95 grams per kilometre. And exactly at 95 grams, it would be 23%. But we do not now get further bands of grams per kilometre and ever increasing percentages. Instead, from that base level, if we go above 95 grams per kilometre, what we will now do is to increase that 23% by, now look at the note here, go above more than 95 grams per kilometre, we add an additional 1% for every complete 5 grams per kilometre above that base level of 95 grams per kilometre. So a little bit of calculation to be done. So imagine, for example, that we have a car with, let's say, 128 grams per kilometre. Let me just make a note of that for you. The car has got CO2 emissions of 128 grams per kilometre. So we now, referring to our table, know that this is more than 95 grams per kilometre. So we start with our base level of 23%. Plus, we're then going to add this additional 1% for every complete 5 grams per kilometre above that base level of 95. What do I mean by every complete 5 grams per kilometre? What we do is we look at our figure, I've given it to you as 128, and we round down to the nearest multiple of 5. So 128 rounded down, nearest multiple of 5, will be 125. So for every complete 5 grams per kilometre above 95, we're going to increase by 1%. So we started at 23%, the benchmark for 95 grams, plus rounded down the 128 to 125, minus by how much does that exceed the 95 grams per kilometre figure. That therefore will equal 25, that will equal 30 there. Fine piece of mental arithmetic shown there. That will equal 30, divide by 5, that therefore will equal 6%. So 128 rounded down to the nearest multiple of 5, rounding down, remember, not up. 125 minus the base level of 95 grams per kilometre, 125 minus 95 is 30. Therefore, how many complete 5 grams per kilometre do we have? 30 divided by 5, hopefully my mental arithmetic is rather better on that one, 6%, and I add therefore that 6% to the 23%, 23 plus 6 equals 29%. Now there is one upper limit to check on here, and that is that the maximum percentage can't be more than 37. However big the CO2 emissions may be, however adverse to the ecology of the planet it may be, the maximum we can be looking at is 37% of the list price. We therefore do not, we have not reached that maximum here, so it's 29% of that list price. Again, list price, use your CO2 emissions to establish the percentage, multiply the percentage to a maximum of 37 there, multiply that percentage by the list price, and what you have, remember, is an annual benefit. Then read the information in the question, of course, to ensure that it is the full year, the full tax year, for which that benefit has been provided. If provided for only a proportion of that, then do a time apportionment. Again, our time apportionments to the nearest month there. Not quite finished in terms of the computation of this benefit, because the percentage rates that we saw, as you can see there, were designated for petrol cars. Now, once upon a time, it was literally just that, those percentages purely for petrol as compared to diesel. But now a new introduction to the rules from 1920 tax year onwards. These percentage rates are increased by 4% for diesel cars Now, we've always had a supplement for diesel. Well, I say always, for many, many years we have, because diesel are, again, allegedly more damaging to the planet than petrol engines. So we increased by 4% for diesel cars, but only for those which do not meet the so-called real driving emissions standard. 2 standard there. There was an RDE 1, an RDE 2 standard there. So you'll be given that information about whether or not this particular diesel car does or does not meet the RDE 2 standard. Now, we're only going to add that extra 4% if we do not meet that standard. If we meet the RDE 2 standard, then fine, we'll treat it exactly the same as a petrol car, and there'll be no increase, no supplement there of 4% to add to the assessable benefit. That said, of course, we are still limited by the same maximum. It will not go beyond the maximum 37%. So if you had established, based on your CO2 emissions, it was say 35%, and then it did not meet, it was a diesel car which did not meet the RDE2 standard, then on that basis you'd be looking to add 4 to 35. Now that of course would be 39, that exceeds 37, so you would use the maximum figure of 37%. Okay, now we should now be able to work out the relevant percentage based on the relevant emissions of the car, and if it is a diesel car, based on then whether or not we meet the RDE2 standards for diesel cars, whether we would add in that supplement, that extra 4% for such non-RDE2 compliant diesel cars. Remembering, of course, when you add it in, as we've said, you do not exceed, you don't go above the maximum of 37% there. But we may get some reductions. We've already mentioned the fact that the benefit that we are computing is an annual benefit. So, reductions here. The car benefit is proportionately reduced if it's unavailable for periods of at least 30 days of the tax year. Now, again, it maybe it's just off the road, maybe the individual working overseas for a while or whatever. But your main situation that you're going to see here is that you're dealing with a tax year where either the employee has only been provided with that car partway through the tax year. So, for example, provided with the car on the 1st of January 2020. Now, that's within the 1920 tax year, but there's only January, February, March, again apportionments to the nearest month here. There's only 3 months of that tax year for which the benefit has been provided. So you do the normal things. Look at or compute, based on the information provided, the relevant list price. Once you've got that, go to your CO2 emissions, checking again whether or not, if it is a diesel car, it does or does not meet the RDE2 standard, and then establishing the relevant percentage based upon those CO2 emissions, up to, as we keep saying, that maximum 37%. You establish what would be the annual benefit, and then you time apportion. If we've only been provided with the car from the 1st of January 2020, then for the 1920 tax year, January, February, March, we take 3/12 of that annual benefit. So there's one situation in which you're going to see time apportion. It could, of course, be that the car was removed from the employee. Maybe the employee left that particular employment. So if that happened on the 1st of January, then 9 months of the tax year, the individual employee would have had the use of the company car. So 9/12 of the assessable benefit. If they want to make it a really interesting question, what they can do is that you started the beginning of the tax year, 6th of April 19, with the use of your then existing company car. But on the 1st of January, you got a new company car, maybe a bigger and better one. So you got 9/12 of the annual benefit for your old car, 3/12 of the annual benefit for the new car. So again, likely that in certainly many questions that we may see in an exam question on this particular topic, that we may get a time apportionment to do. Maybe even, as with that last example, 2 time apportionments. How many months on the old, how many months on the new car there. So there's one reduction that might apply. And also, where the employee makes a contribution to the employer for the use of the car. Now, in real life, it's very unlikely that such a contribution will be made. Now, this contribution is as distinct from where we mentioned earlier the capital contribution when the car was first bought by the company for the employee. That capital contribution in order that the individual could get the car that he or she wanted, rather than just the ones that were available on that financial limit that that particular employer imposed. So in which case the capital contribution reduced the list price. What we're now talking, rather than a capital contribution, is a revenue contribution, whereby, unlikely though it is in practice, in terms of an exam question, you may very well see that the employee is required to make a payment equal to £100 per month to the employer for the benefit of having the private use of that car. So fine. If the employee has had the car for the entire 12 months of the tax year, 12 months at £100, £1,200 deduction, that would be a reduction from the otherwise computed assessable benefit, based again, as you know, on the list price of the car and on the CO2 emissions of the car. Probably not that likely, but you might have a second car here as an employee. It doesn't matter how many cars you are provided with as an employee, each one is dealt with in its own right. So where more than one car is made available to an employee, the benefit of each car is simply based on its list price and its CO2 emissions. You do exactly the same calculation for the second car as you would for the first car. There is no difference there, therefore. Okay, that's all the theory. Look up your rates and allowances at the front of your notes here, if you haven't already done so. That is the information that will be available to you in the exam room. So you are not going to try and memorise all the different grams per kilometre and percentages here. You're simply going to reference the rates and allowances page provided. So if you haven't already, get your start of your study notes open with the rates and allowances page, because we're going to need that in terms of then applying this basic knowledge here to the various circumstances that we see in example 4. Now, I'll be wanting you to have a go at this based on what I've already told you, but I'll lead you into the first couple of these and then leave you to your own devices to have a go at the others. What, of course, I will then do is review each of the answers to each of the situations you see in example 4 to make absolutely certain that we do understand the answer. But let's look at the process that we now undertake. Now remember, when dealing with the car benefit, what do we need to know about the car? We need to know the list price and we need to know the CO2 emissions. We also need to know, if it is a diesel car, whether that particular diesel car does or does not meet the RDE2 standard, to know whether or not to potentially add a 4% supplement to the assessable percentage figure. So what have we got? We've got to calculate the taxable benefit here for our 1920 tax year for our, again, various racing driving heroes, Lewis, Nico, Fernando, Jensen and Sebastian there. Again, apologies if you have no knowledge of F1. So what have we got first of all with Lewis? Lewis was provided with a new, there we go, diesel-powered company car. So again, we're picking up on, is it diesel, is it petrol? If it is diesel, we need to have other information, of course, about do we or don't we comply with the RDE2 standard. Next relevant point, on the 6th of August 19, we're looking at the 1920 tax year. 6th of August 19. It could have been the 1st of August. Again, I've given you the 6th of August. It's synonymous with, of course, the tax months running from the 6th of April at the start of the tax year to the 5th of April at the end of the tax year. But it could have been the 1st of the month. You would just go to the nearest month here. So don't worry about, oh, it's the 1st instead of the 6th. It doesn't matter. It is exactly the same calculation. So we've got a diesel car provided on the 6th of August 19. So you're going to have to work out, presuming that that car has been provided all the way through to the 5th of April 20, how many months worth of the 1920 tax year are we going to compute the assessable benefit for? Remember, the figure you compute is an annual benefit. List price. That's what we wanted to know. The list price of £13,500. CO2 emission rate. CO2 emission rate, 122 grams per kilometre. And the motor car meets the RDE2 standard, therefore there's no 4% supplement. So, what have we got? List price, £13,500. To that list price, we must apply the relevant percentage based on the official the official CO2 emission rate, here given of 122 grams. So what do we do? 122 exceeds 95 grams per kilometre. Again, you've got the hopefully the page of your rates and allowances open. We can see that for 95 grams per kilometre, we've got that base level of 23%. But when we go above that, we're going to add 1% for every complete 5 grams per kilometre in excess of the 95 gram figure. So what do? We round down to the nearest 5. 122, round down, that will be 120. 120, take away 95. How much in excess of the base level of 95 are we? That is 25. Divide by 5 equals 5. So 1% extra for each complete 5 grams per kilometre in excess of the 95 gram per kilometre base level. So we started with, go back, what was it for 95 grams per kilometre? There you go. It was 23%. We now know it's going to be that extra 5% plus the 23%. 28% would be our relevant figure. And that figure will not be increased by the diesel supplement. It is RDE2 standard compliant, and therefore there's no extra 4% to add. Had that note said the car does not meet the RDE2 standard, then we would have been adding in an extra 4% to the 28. That would take us to 32. 32 does not exceed the maximum of 37, and therefore we would have used that figure. Irrelevant here because we do satisfy the RDE2 standard, and on that basis there's no extra 4%. So at 95 grams it was 23%, plus then for each complete 5 grams per kilometre above that 95 figure, that gave us an extra 5% to add to 23, giving us 28%. Work that figure out. Remember, that is the annual benefit. The annual benefit. You then must time a portion. Remember, we only had the car from the 6th of August 19. Okay, now I'll just talk you through the second one, then I'll leave you to do both the first Lewis and indeed then Nico, and to continue on dealing with these others once you've gone back and reminded yourself of the content of the notes so far. Right, what have we got with Nico? Petrol-powered car, so no question of any 4% supplement. Throughout the 1920 tax year, full annual benefit. List price, 16,400. Official CO2 emission rate, 162. The 162 round down to 160. Minus 95. That is 65. again, check my maths on my early mental arithmetic there, that I think is 65. Divide by 5, I think, what's that? That's an extra 13% to add in, therefore, to your 23%. That would come to 36. It's petrol, so there's no question of any supplement there of 4%. It does not exceed, it does not, however, exceed 37%. So we've got our figure at 36. We've had the car for the full year. There is your full annual benefit. Okay, guys, time for you to take over now. See if you can work out, firstly for Lewis, then for Nico, looking at, again, as you do each of these exercises, then look at the answer. Keep your eyes away from the answer to the next part of the exercise, of course. So have a go at Lewis, check the answer to it. Have a go at Nico, check the answer to it, and then work through, seeing what other issues that brings in. Before you do that, however, again, take a look back at these notes. Make sure you've got your rates and allowances page open as well, so you'll be able to work through and hopefully agree with the answers in the back. Again, when you come back to me, once you've done that, I'll take you through those answers in the back to make sure that indeed that we have fully understood this most important area of establishing what would be a car benefit on the employee for use of that employer-provided car. Over to you. Okay, let's have a look at how we fared, therefore, with those various exercises within example 4. Now, the first two of these we had a go at together. Let's just confirm our answers to it. Again, as we know, we want to know the CO2 emissions. We want to know the list price. We want to know whether the car is petrol or diesel. If it is diesel, is it or is it not compliant with the RDE2 standard? We also need to know whether or not that particular company car or company cars have been made available throughout the tax year. So what do we have? The emissions were above 95 grams per kilometre. So you started with your benchmark base level of 23, and we added, as we agreed, 5%, that being 1% for every complete 5 grams per kilometre above the 95 figure. So we rounded down to 120 minus 95, that was 25, divide by 5, that's 5%, add that to the 23, and we've got ourselves 28%. 4% surcharge for diesel is not applied because it is RDE2 standard compliant. Only available, however, for 8 months of the tax year. So the benefit is going to be time apportioned. 13,500 the list price, 28% is the relevant percentage, but for only 8 months of the tax year. Again, from 6th of August through, therefore, to the 5th of April, some 8 months. So 8/12 of that, and all being well, do make sure you check my arithmetic on this, but hopefully that comes to £2,520 there. On to Nico. Again, the CO2 emissions were in excess of 95 grams per kilometre. The CO2 emissions figure here, you recall, was 162. We rounded down to 160. Again, nearest multiple of 5, rounded down. So it's divisible by 5. The base level percentage of 23% is increased in 1 percentage steps, as we know, for each complete 5 grams per kilometre above the base level. So the relevant percentage that we computed, as you may recall, came out to 36%. 23 plus 13%, it being 160 minus 95, that is 65, divide that by 5, that is 13. Add our 13 to the 23, and there's our 36%. Apply that to the list price, and that will give us our assessable benefit. Let's just get some of those markings out of the way. That should be 16.4 times 36%, and all being well, that will come out at 5,904. Here it was provided throughout the tax year, so no time apportionment to do. Now, as you can see there, we got up to 36%. The maximum is going to be 37. So if here we saw that our CO2 emissions, in this particular example, they were 162. If they were 165 grams or more, then that means we're going to be up to our maximum 37. If you've got 165, 66, whatever, 165 up, but at 165, 165 minus 95 equals, that therefore is going to be 70, divide by 5 equals 14%. Add 14% to 23%, it's 37. So if your CO2 emissions are above 165 grams per kilometre, then irrespective of anything else, you know it's going to be the maximum 37% to apply. So no reason, therefore, to go off and do a detailed calculation. If all you're doing is doing an objective testing question, we're only interested in one thing: to get the right answer. How you get it is not something that the examiner will see. It's just, have you chosen the correct answer or not? Now that, of course, is what we see happening with Fernando in our third example that I left you to have a go at on your own. It was a petrol car, available throughout the tax year, list price 22,600, official CO2 emission rate 249 grams per kilometre. As you can very clearly see, well in excess of 165 grams per kilometre. Now I show the calculations in the answer in the back and we'll look at it in a moment, but we already know from what I've just said that we're going to go above, therefore, what would be the maximum of 37%, so we'll use the 37%. This time, though, there's something else that's new coming in. Fernando paid the company during 1920 £1,200 for the use of the car. So any contribution like that, we called it a revenue contribution, that is deducted in determining the assessable benefit. If Fernando had made a capital contribution to firstly acquire the car through the company, on that basis, that capital contribution would have reduced the list price to which then the relevant percentage would be applied. Here on your revenue contribution, you have to pay the employer a certain amount per month, therefore per year, for the beneficial use of that car, because you get private use of it. Then that total amount paid in the tax year is an allowable deduction against your assessable benefit. Quick look at the answer. CO2 emissions are above the base level of 95, well above. Now, if you did all the detailed calculations, it would come out to 53%, being 23% plus 30. Where does 30 come from? 245 minus 95 is 150. Divide 150 by 5, that's 30. That can't be. It's restricted, therefore, to the maximum 37%. It was available throughout the tax year, so a full annual benefit is to be computed. What will that be? 22,600 list price times 37% equals 8,362. However, we do have the contribution made by Fernando to the employer for the private use of that car. And on that basis, it's an allowable deduction. And all being well, again, if my arithmetic is correct, that should leave you with £7,162 there. Contribution by Fernando, as you said, towards the use of the car reduces the benefit. Back to question. Next one, Jensen. Petrol. Throughout the tax year, list price 16,000, official CO2 emission rate 90 grams. We've dropped below the base level of 95. So let's go back to our table and see what we see. This was 90 grams. So looking at, let's clear the decks of all those lines on that. Therefore, what have we got? 90, that's between 76 to 94 grams per kilometre. That, therefore, will be 22%. So a straight read off from the table. Let's just go back to the example and see whether there's anything else that we need to pick up on here. It's a petrol car, so being petrol, obviously it's not a diesel car, and on that basis there's no question of any supplement of 4%. So literally all we've got our list price of 16,000 based on 90 grams per kilometre it falling between 76 to 94, that is 22% as the assessable benefit, and as the car was provided throughout the year, it's a full annual benefit for you to establish. Let's have a look at the answer to it. Here we go. Between 76 and 94, relevant percentage 22, petrol car, benefit 22% of the list price, that's 3,520, at least I hope it is, for our 1920 tax year. Again, as was provided with that throughout the year. One more exercise to do here, going back to the examples. We've got, last but not least, Sebastian, provided with a new diesel car. As soon as you see diesel, you're thinking, RDE2 standard. I wonder if it is RDE2 standard compliant there. Provided throughout 1920, list price £11,000, official CO2 emission rate 60 grams per kilometre. So again, well below 95. We're going to have to go back to our table and look at what particular category that falls into. And based on that percentage, the motor car does not meet the RDE2 standard, so we'll add an extra 4% to it. So at 60 grams, what category are we in? Back to the table. Again, clear the decks. 51 to 75, that's what we're talking in terms of. That therefore means 19%. But because it's diesel and it's non-RDE2 standard compliant, we have an extra 4% as per the notes there. Going to the answer therefore, 51 to 75, that's 19%, plus the 4% for the diesel non-RDE2 standard compliant. That therefore makes it a total of 23%. Again, the point here, the 4% surcharge applies because the RDE2 standard is not met. 23% of 11,000, full annual benefit, £2,530 therefore. Okay, again, go back through, make sure you're happy with each of those. Again, it's something that you need to know how to do. Okay, well, this lecture's gone on a little bit long, and therefore, rather than try to add into this already extensive lecture, the information about what happens when the fuel is provided for the use of the company car as well, we'll hold that over until next time. So next time, therefore, we'll finish off dealing with cars, looking at the fuel benefit. This again is a very straightforward and functional area, so no reason why you can't read through this prior to me dealing with it with you in the next lecture, so that you'll better understand what we're doing. Very functional, and again, a benchmark figure will be used, which is provided to you in your rates and allowances page. So again, make sure you've got that rates and allowances page ready next time. As well as cars, what we've also then got to look at is vans and heavier commercial vehicles. Again, it is usually 95% of any questions in this area would be covering cars rather than vans or any other heavy commercial vehicles there. But those will be held over till next time, along with one final assessable benefit to deal with there as well, that being beneficial loans. A loan provided by your employer to you, the employee. Beneficial, what makes it beneficial? A low rate of interest. By comparison, that is, to the official rate of interest. All of that and more in our next session together.